cool. Hi, Nikesh.
Hi, John.
How are you doing?
Good, how are you?
So, I think most people in the audience probably have heard of SoftBank, but they probably don't have an idea of exactly what you guys do. So I think I just checked today, the company's market cap is about $58 billion. And obviously...
Not as much as should be, but...
And so you guys, the primary business is you're a telecom company, right, in Japan. But I feel like you do a lot more than that. Maybe you can explain to the audience the kind of scope that your business has?
Yeah, I think SoftBank was founded by a legendary investor in Japan called Masayoshi Son. In the last 30 plus years, he has invested in many companies around the world. About 15 years ago, he levered a purchase and bought Vodafone Japan, converted that into a very large mobile company in Japan called SoftBank Japan, which is a very successful mobile business, one of the top 3 mobile businesses in the country. But in addition to that, he was an early investor in Yahoo, which he sold. He did a joint venture with Jerry Yang to make Yahoo Japan, which is a public company, close to $20 billion, which we own 40% of. We also own Sprint, 80+% of Sprint. We also own 30+% of Alibaba, which was... He was
small company, right?
Yes.
Alibaba.
Well, smaller now than it was a year ago. But yes, we own a third of Alibaba. And we own 70+% of a company called Supercell, which you might know as the maker of Clash of Clans. And recently we've invested in a few companies around the world. We invested $1 billion in a Korean company called Coupang.
$1 billion?
$1 billion.
Was that like over a certain period of time, or?
No, that was one check for $1 billion.
That was one check?
One check
$1 billion.
Yes.
Okay. I mean, what kind of company needs that kind of cash? I mean, that's a lot of money, right?
It is a lot of money, yes.
Okay.
Well, it's, in Korea, we think that Korea is a very well-connected country. It has got tremendous amount of broadband penetration.
So I mean, the audience might not know the company. So which company is it that you invested in?
Oh, there's a company in Korea called Coupang, C-O-U-P-A-N-G, Coupang.
So it's like the Amazon of Korea, perhaps, if you're looking for like a way to...
Yeah, so Coupang is an e-commerce company. Korea has a $50+ billion e-commerce market established about 15 years ago with a lot of successful companies out there, but these guys pivoted the entire model. It's all mobile. It's more like an Amazon model. Right. It's a very high customer service model as opposed to the model in the market, which is more of a collection of various different sort of entities they put together. So we think it has huge potential. Of course, like Amazon has required a lot of capital to get to where they are. We think a company which is well funded in Korea with a lot of capital is going to be able to recreate that model in Korea and hopefully take away share from the existing players.
So you invested $1 billion in that company, but that's just one investment that you've done in Asia. I mean, have you cut other big checks for other companies? Which kind of companies have you?
We invested close to $800 million in a company called Snapdeal in India, which is now the top 3 e-commerce companies in India.
Okay, so e-commerce is a big focus for you guys then?
It has been a focus for the last 1 year because, remember 1 year ago, SoftBank was a Japanese telecom company which had done some great investments like Alibaba, etc. And in the last 1 year, we've tried to pivot the company into a larger portfolio of assets around the world. So I left Google about year and a few months ago. We've created a team of 15 or 20 people, and our aspiration is in the next 10 years to be able to invest a few $1 billion a year in technology companies around the world.
A few $1 billion here. So there
are probably $1 billion a year.
So there are probably some guys in the audience who are interested to know, like, what kind of companies are you searching for? I mean, a lot of the deals that you've done have been in Asia, so India. You mentioned Korea, like Southeast Asia too. Is the US market a focus for you? And if so, what kind of companies are you searching for here?
Oh, we look carefully at the US market. The US market is of interest. We think some of the valuations in the US market are a bit robust. They're priced for what I say perfect execution.
Right.
And nobody has had perfect execution in the past. Now, that doesn't mean that some companies won't do well and keep getting more and more valuable over time. But we think, on average, we will have an opportunity to invest in many of the successful companies in the US over the next 3 to 5 years. And we're going to wait our time to see when is the right opportunity to invest. We're looking closely at the US market. We made one investment in a company called Banjo. We invested $100 million, which is a good-sized check.
Well, not for you guys though, right? I mean, you're operating on a much higher kind of scale, right?
Yeah, but if you look at the market, see, if you look at the market as a VC market,
Yeah.
the VC market is very efficient, especially here in Silicon Valley. There are a lot of people who are in the VC business. They have funds from $100 million to a few $100 million. There's a whole bunch of corporate venture capital out there. So we decided that's not the space we want to play in.
Okay.
Hence, we shut down SoftBank Capital and reorganized it and decided what we want to do instead is to work with the VC community to see what are some of their heroes, what are some of the companies they have a lot of conviction in, and see if we can step in to help them to go from where they are to scale. Hence, our checks are mostly between $100 million to $1 billion.
Okay, so you're looking at companies that are going to go outside of the US, or just the companies that are at a much later stage instead of kind of. What's the kind of philosophy? I mean, what kind of companies are you looking for?
We want to make sure the companies we look at are in the right market. So we want to make sure it's a big market. So we think e-commerce is a big market. We think transportation is a big market. We think healthcare is a big market. We think education is a big market. So there's many large markets. We want to make sure their company is targeting a large market. We want to make sure in that market the company has a viable proposition or viable idea, and they have shown some momentum to make sure that they're heading down the right track. They've been able to execute. They've been able to either gather users or be able to create transactions. And then, of course, you want to make sure it's got the right management team which has the stamina to be able to scale.
Okay, interesting. And so in India, you've recently mentioned that you're setting aside $10 billion. I mean, that's, again, a huge amount of money. Like, I mean, how are you going to be spending that? What kind of companies are you looking for? And India is obviously a really huge country, but what is it about India that makes it so interesting for you guys?
Well, I think about a year ago when we looked at the world, we said India we thought was at an inflection point. It had a new prime minister, new governance. For the last 10 years, we hadn't seen too much progress in the country from an economic perspective under prior leadership. Yeah. We're very excited about the new government, the things they're trying to do. As you can see in the last few weeks, months, that China has begun to slow down a bit. That's kind of evident across the financial markets and all the commentary you hear. Yep. We think India is on a path to steady growth for the next 5 to 8 years. Highly connected market, but highly fragmented. So we think it is going to skip a few sort of generations of business. I mean, like for example, the commerce market in India, despite being a very large market, the largest commerce player in India is $6 billion of GMV. Compare that to a Walmart or Amazon over here. Compare that to Alibaba in China. So then say, what's the opportunity here? Today, the top 3 e-commerce companies collectively have more GMV than the top 3 retail companies in India, which is different, which is an aberration. It's oh my God. So which ones are more likely to succeed? The ones which have to go find real estate, create bricks and mortar worth of sort of retail, and go in, or people who skip the needs of real estate, which makes up 12 to 14% of a P&L of a retail company in India. So we think that's a huge market. So we decided we want to be a player in the market, and we went in, and we own close to a third of one of the top 3 e-commerce companies in India. We looked at the transportation opportunity. We looked at Uber over here. We looked at what they were doing. We decided that was going to be a big space in India, so we found a company which, by our expectations, has between 60 to 80% market share in India, and in the last 1 year has gone up 8-fold.
So was Uber, a target for you guys? I mean, were you keen to put money into Uber, and you couldn't do that, and so you found the Indian version, or did you go out there and you said, like, this is a local player that's kind of beating Uber on their turf? What was the kind of thinking behind that?
Well, first of all, we think it's a very big space. We think transportation as a service is a very big space, and over time, it creates tremendous amounts of opportunity. Effectively, it's the act of moving things from point A to point B. Whether you want to move people, you want to move packages, you want to move food, you want to move groceries, we think transportation as a service is going to be a huge space. Yeah. Now, in that space, clearly Uber is a market leader, especially in the United States and many other parts of the world. And you look around the world and say, are there opportunities for other companies with similar ideas, with great management teams to be able to execute in local markets? So we think that the company we found is going to be able to execute in the local market. Maybe India is not going to be a one-player takes all. Maybe it'll be a 2-player market. It's a very large market, so we're very comfortable with our investment. It
seems like the companies that are rivaling Uber in Asia are kind of joining up, right? There are some common investors shared across the Uber rivals in China, India, and Southeast Asia. And I know that, obviously the big Chinese company has also invested in Lyft and in some other companies too. Is that an area that you're looking at? Are you looking at investing in those companies and building some kind of anti-Uber alliance, or is it more a case of, you do it market by market? So India, you saw an opportunity and you got into that one.
I think it's important to understand, creating rivalries doesn't create a lot of value. For us, investing in great companies creates a lot of value. So yes, we happen to be investors in Ola, we happen to be investors in Grab Taxi in Southeast Asia, we also happen to be investors in Didi Kuaidi in China.
That's 3 Uber rivals, right?
Well, there are 3 companies which we thought had the right valuation in those markets, allowed us the opportunity to invest large amounts of money, and we believe they have a future in being able to provide transportation as a service. As I said, it's possible that it's not a winner-takes-all market. Maybe it's going to be a 2-player market, and hopefully the companies we've invested in are going to be one of those players.
Yeah.
So are they going to compete in those markets with Uber? Probably. Who's going to win? I think the execution between the 2 companies is going to decide.
Okay, so over time, I mean, at the moment, that's an industry that's interesting, right? Because lots of these companies are raising funds. I think Ola in India is raising about $500 million at this current time. At what point do they stop raising and start actually earning, right? And because it seems like
is that a generic question to 100+
yes.
unicorns, or just specific to Ola?
No, those taxi app companies, because they're always raising, right? Everyone's always raising. When do they stop raising and start, making profit and doing?
I think they stop raising when people stop giving them money.
Okay, so when are you going to stop giving them money?
When they stop raising money.
Okay. Are you in the current round at the moment? So they're raising $500 million.
We've made a small investment, but there's lots of other players who wanted to get into the round. We own a substantial stake in the company, so we don't need to keep.
Are you in the round that they're doing?
We are in the round in a small number. Yes.
Okay, that's interesting. Cool. Okay. I mean, maybe you can talk a bit more about. You mentioned earlier that you've changed the investment model that SoftBank had. So you had in the US, you had a couple of vehicles that were investing early stage. Obviously, in Asia, as you've mentioned, you're cutting like very, very big checks. But you've changed that, right? So you've stopped betting on earlier companies, and you're working to invest in bigger chunks of companies that have already been proven. Why are you doing that? Because it sounds.
Yeah, sorry.
I mean, it stands to reason that you could go out there and you could find really early stage companies, and you've got the kind of scale internationally that you could kind of grow them very, very quickly. Like, what was the reason that you've done that? And I mean, are you moving towards something else, or is this the kind of first step that you've done?
Well, if you think about SoftBank, as we talked about earlier, we own a very large telecom company in Japan, which generates
in the US too, right?
As well as
perhaps
the US.
Not large, but you own a telecom company.
No, it's a large company. It has 50 million subscribers. That makes it a large company.
That's quite large.
Okay, yeah. So we own Sprint. We own SoftBank Mobile in Japan. We own a third of Alibaba. We own Supercell. We own 40% of Yahoo Japan. So we own 5 very large assets around the world. Our Alibaba stake is over 30% of the company. We think Alibaba has huge potential from here. I think even at current market cap, it's probably worth $40 or $50 billion, which Masa invested $200 million in to make it a $40 or $50 billion investment.
That's a crazy investment.
Right. So let's assume that Alibaba does well going from here in the next 3 to 5 years, we'll be sitting on a very large asset of $70, $80 billion, maybe $100 billion. So sit there and say, well, how do you create the next stage of this company? You don't create it by investing $20 million or $50 million at a time. You've got to figure it out. Most portfolio theory will tell you that if you own such a large stake, you should diversify and invest in other things. Now, diversifying a $100 billion stake is not a simple task. And that requires you to be willing to commit large amounts of money into companies. The good news is we classify ourselves as what we call permanent capital. Once we invest in a company, we stay in the company for a very long time. Masa stayed in Alibaba from $200 million to a $150 billion company, and that's been over 15 years. We haven't sold a single share.
Wow.
So we don't have typical pressures of an LP or a GP like in a VC or private equity model. We go in, we want to work with the founders. So it's kind of like we don't want to work with too many people. We cannot scale to working with 50 founders.
Yeah.
We want to work with 10, 15 founders around the world. Okay. So we're looking for those 10 or 15 people we think are going to create companies which are 10, 20, $30 billion companies in the future. And they come in, we have a team of 10 or 15 people. It's almost like family. All these founders come to my house, we have dinner, they go to Masa, they have dinner with him, we spend hours talking about the company. Yeah, that's the way you build great companies. So I don't take a board seat anymore. I don't go sit on the board. I only invest in founders who are willing to be my friends, come hang out with me, and I believe they're going to create a very, very large company.
Okay. And so at the moment, most of those founders are based east, right? In
No,
Asia?
there are founders all over the place. And there are some founders who are not necessarily companies we've invested in who I still work with because we believe they're going to create great companies.
Okay.
And we may get a chance to invest in the future with them. And if you look at it, I think a company like Google, when it went public at $85 a share, today the stock's worth $1,300. So you didn't have to be an early investor in Google. You could have invested at the IPO, and you could still 10 times your money. So it's not necessary to be an early stage investor to make a lot of money. You just have to make sure you're investing with the right team, the right founders, and the right company.
Yeah. So you spent 10 years plus at Google? How long were you at Google for?
10 years.
10 years. And so it's not the normal thing, right, to be working at Google for 10 years and to go work at like some Asian company.
Asian companies say so dismissively.
Well, I'm talking in terms of like people who are living here. I mean, obviously I know who SoftBank are, and you guys are a huge company. But
6.7 billion people in the world live outside
in Silicon Valley,
States.
though, I mean, SoftBank isn't like a Google, right? So it's not that average thing to do. Like, what was the reasoning behind going to SoftBank?
Life is too short, John. Life is a collection of experiences. So I decided it was time to start a new experience in life. 10 years at Google is a long time. I had a great time. Google is one of the greatest technology companies ever created.
Yeah.
And I worked there for 10 years.
So did you have in mind becoming the next CEO of SoftBank? Because that's what you're going to be,
I had in mind
right?
to wake up in the morning, have a great time, and hopefully when I go forward 10 years and I look back and say, I had a fantastic 10 years. And I'm hoping that when I look back after 10 years, there'll be 4 or 5 companies, 6 companies, 8 companies around the world I can identify and say, I was involved in some way, shape, or form, in a little way, in being able to make that an even greater company than it would have been without my engagement.
So you've been earmarked as the future leader of.
This is a bad thing, right?
Is it? You tell me.
Well, when he told me that, I said, look, when he didn't tell me that, there was a probability that I'd become CEO. Now there's a probability that I don't. Right? So I'm not sure it's a good thing or a bad thing.
Okay. So what's the company going to be like under your kind of leadership, as and when you possibly perhaps maybe do become the CEO?
I don't think of it as a transition between Masa or me. I think what we need to do is we need to take what he's done over 35 years in terms of being a great investor, a great operating executive, and be able to institutionalize that. We need to be able to say that next 10 years of SoftBank allowed us to create a situation where more people can work at SoftBank, we can invest in a lot more companies, and even if Masa is not there and I'm not there or the next person is not there, that there is a tradition where people want SoftBank to get involved because SoftBank brings value to their investment, to their effort as being a CEO. So like, if you step back, the thing which Masa and I agree on, if you look at the tech universe, every tech company, however hot they were when they started, over a period of time, they plateau. And you go back 30 years in Silicon Valley and look at every tech company, pretty much that's happened.
Yeah.
And sometimes it goes like that and goes back like that. Apple is a case where it got restructured and Steve came back and he made it an even greater company than it was. But most tech companies plateau. And the reason they plateau is because there's a very passionate management team which goes in, a very passionate set of founders over time. They get rich, companies get larger, you bring in different management, and over time, companies plateau. So our principle was, how do we make SoftBank evergreen? How do we make sure we don't plateau? And the way we're going to do it is what do we bring? We bring experience, we bring capital. So why don't we bring our experience and capital to those kinds of passionate entrepreneurs? So instead of us creating companies which are going to be $100 billion companies, let's find these people who are going to create the $100 billion company. Let's provide them all the capital and support that they need and see if we can support them for 10, 15, 20 years. So I'd much rather own 25% of $500 billion companies than try and go out and create the next $100 billion company. Okay. I think the math works, yeah.
And in terms of your own personal kind of, so you've just made a pretty big investment, right, in SoftBank. How many shares did you buy, or how much worth of shares did you just buy?
I'm in the process of buying $483 million of shares.
Oh, okay, that's quite a lot of money, right?
Yes.
What's the reasoning but behind that? I mean, that's enormous, right?
Yeah, I came to this country 25 years ago with $200, which I borrowed from my father. I think it's fair to say that in 25 years, I don't have to worry about having a place to live or being able to eat, which is what I used to worry about 25 years ago when I came here. If I didn't work at Burger King, I wouldn't have enough money to be able to eat the next. Actually, it gave me free, so it doesn't matter. But so I figured as I was going through a transition, working for SoftBank, going away from Google, it was trying to increase my risk profile, because part of what happens is as we get older, we get more complacent, our risk profile changes, we take less risk. So if I was going to take a risk, I decided I'm going to go all in and feel the same pain or same risk as an entrepreneur that I invest in. So nobody can challenge whether I believe in SoftBank or not. It will make me the second largest individual shareholder of the company when I'm done doing that. And there's a lot of leverage involved, so trust me, every action that SoftBank takes, I watch very carefully because it has a huge impact on every shareholder, including me.
Amazing, amazing, great. Oh, I mean, I had so many other questions to ask you, but unfortunately we're out of time, so we have to leave it there. Yeah, thank you so much.
Thank you very much.
Real pleasure.